Hey there fellow traders, have you ever felt like there's some secret trading strategies out there that you're missing out on? Or maybe you wonder if there's a better way to predict market trends? Well, let's dive in and unveil these mysterious together. This strategy is a game changer for many traders, so give it a try and see how it can improve your trading strategy. We're going to talk about an amazing tool that many traders swear by. The range filter buy and sell indicator. You can easily add it to your chart on the TradingView platform. And once you do, we'll need to tweak its settings a bit. This handy indicator gives us buy and sell signals based on a range filter. When the filter indicates a buy, that's our cue to enter a long trade. And on the other hand, when it indicates a sell signal, that's our signal to enter a short trade. Now that we've got basics down, let's see the indicator in action with a few examples to help you better understand how it works. I've tested it on USD CAD 4-hour chart. And the results were quite impressive, yielding a profit of 61%. However, it's important to note that this tool isn't foolproof and can sometimes give inaccurate signals. To make the best trading decisions, we'll need to filter out these false signals. But before we dive into that, if you're finding this video helpful so far, please take a moment to hit that like button and subscribe to our channel for more valuable content. Now let's explore how we improve our trading strategy by adding a second indicator to the mix, enhancing our ability to filter out those inaccurate signals and make more smart trades. Now let's introduce another tool to help refine our trading strategy, the capping cross-check 200 MA 50 cross indicator. After adding it to the chart, we'll need to make a few adjustments. This handy indicator includes two moving averages, the 50 and the 200. These moving averages help us identify the trend direction. To break it down further, the 50-period moving average reflects shorter-term price movements, while the 200-period moving average represents longer-term trends. When the price is above both, it suggests that the short-term and long-term trends are in agreement, pointing to a bullish or upward trend. Conversely, if the price is below both moving averages, it implies that both short-term and long-term trends are bearish or moving downward. As a professional trader, it's essential to have a well-structured strategy in place to maximize profit and minimize risk. With the range filter and cabin cross-check indicator as our foundation, let's outline a smart approach to entering and exiting trades. First, we'll focus on entering a buy trade. Our primary indicator, the range filter, needs to show a buy signal as a preliminary step. However, to confirm the signal, we'll turn to our secondary indicator, the cabin cross-check. This indicator must also point to an upward trend, giving us the green light to proceed with the trade. Next, if both these conditions are fulfilled, you can enter the buy trade. Next, it's crucial to manage risk by setting a stop loss for the trade. The stop loss protects your investment by automatically closing the trade if the market moves against you. You can determine the stop loss level using various points of references, such as the recent swing low, the red line, or the green line. By incorporating a stop loss for your trade, you'll be taking a proactive step toward proper risk management. And when it's time to exit the trade, we'll follow a guideline known as the risk-reward ratio. A risk-reward ratio of 1 to 1.5 is a common target, meaning for every dollar you risk, you aim to make $1.5 in profit. But adhering to this ratio, you ensure that your potential profits outweigh the risks, which is a key factor in maintaining long-term profitability. And when it comes to entering a sell trade, we'll apply a similar strategy as we did for the long trade, but with some key differences. Our trusted range filter indicator will be the first to guide us this time. We're looking for a sell signal, but just like before, we need a confirmation from our second indicator, the cabin cross-check, which should now show a downward trend. Once both these conditions are met, we can confidently enter the sell trade. In terms of risk management, the importance of a stop loss cannot be overstated. For a sell trade, we'll again use a stop loss to protect our investment, but this time we'll look for a different reference points to set our stop loss level. These points might include the recent swing high, the red line, or the green line. And when it's time to exit the trade, we'll still aim for a risk-reward ratio of 1 to 1.5. Alright, we've reached the end of today's lesson. As you continue your trading journey, don't forget to explore our recommended video for even more trading strategies to add to your toolkit. Happy trading!